In this video, I will show you 7 strategies on how to turn your money into more money. 1. Invest in stocks. Stocks have consistently proven to be a good investment for most people. They have outperformed most investment classes over the long term, and they have the potential to grow your wealth significantly. Over the past 4 decades, U.S. stocks have delivered better returns than bonds, savings accounts, precious metals, and most other investment types. There are a few reasons why stocks have been such good investments. First, as a stockholder, you own a piece of a business. As that business grows and becomes more profitable, the value of your stock will increase. Second, the stock market is generally a long-term investment, which means that you can ride out any short-term fluctuations in the market. Of course, there is no guarantee that stocks will always go up. However, over the long term, they have consistently outperformed other investment classes. Here is an example of how stocks can grow your wealth over time. A $10,000 investment compounded at 10% for 30 years would grow to nearly $175,000. Before I continue, if you're new here, hit the subscribe button so you make sure to never miss my weekly videos. Of course, you should not invest all of your money in stocks. It is important to diversify your portfolio and invest in other asset classes as well. If you are looking to grow your wealth over the long term, then stocks are a good investment for you. However, it is important to do your research and understand the risks involved before you invest. 2. Open a high-yield savings account. Sean Gould, a wealth strategist at Waddell & Associates and a certified financial planner, recommends that before you invest your money, you should have an emergency fund of 6 months' worth of living expenses in cash. A high-yield checking or savings account is a good place to store your emergency fund because it is FDIC insured, which means your money is protected up to $250,000. Your money will also generate more value in this type of account while you wait for an emergency to occur. While traditional savings accounts offer paltry interest rates of around 0.01%, high-yield checking and savings accounts offer rates that exceed 1%, a 100-fold increase. These accounts are typically offered by online banks, which can afford to offer higher interest rates because they don't have the overhead costs of brick-and-mortar branches. 3. Create multiple sources of passive income. Passive income is money that you earn without having to actively work for it. It is often thought of as the holy grail of financial freedom, as it can allow you to generate income while you sleep. However, passive income is not a get-rich-quick scheme. It takes time and effort to set up passive income streams, but the rewards can be significant. Common forms of passive income include real estate investments. This involves buying and renting out properties. Royalties. If you own intellectual property, such as a book, song, or patent, you can earn royalties from its use. Royalties can be a steady source of passive income, but it's important to make sure your intellectual property is protected. Blogging. If you have a blog that generates traffic, you can earn money through advertising, affiliate marketing, or selling products or services. Blogging can be a great way to build a passive income stream, but it takes time and effort to build a successful blog. There are many other ways to generate passive income, so it is important to explore your options and find what works best for you. 4. Become a silent partner in a new business. Becoming a silent partner in a new business can make money in a few different ways. Profit sharing. As a silent partner, you will typically receive a share of the profits generated by the business. This share will be based on your initial investment and the terms of the partnership agreement. Capital gains. If the business is successful and is eventually sold, you will likely receive a share of the capital gains. This is the difference between the sale price of the business and the initial investment. Dividends. If the business is profitable, it may pay dividends to its shareholders. As a silent partner, you will typically receive a share of these dividends. The amount of money you can make as a silent partner will depend on the success of the business. If the business is successful, you can make a significant amount of money. However, if the business is not successful, you may not make any money at all. 5. Invest in real estate. There are many ways to make money investing in real estate. Here are some of the most common. Appreciation. This is the most common way to make money in real estate. When a property appreciates in value, you can sell it for more than you paid for it, making a profit. Rents. If you own rental properties, you can make money from the rent that tenants pay. This is a reliable source of income, but it can be cyclical depending on the local economy. Capital gains. When you sell a property that has appreciated in value, you may be liable for capital gains taxes. However, if you hold the property for at least 12 months, you may qualify for long-term capital gains rates, which are lower than short-term capital gains rates. Cash flow. If you own rental properties that generate enough rent to cover your expenses, you may have positive cash flow. This means that you will have money left over after paying your mortgage, taxes, insurance, and maintenance costs. Tax benefits. There are a number of tax benefits that can be associated with real estate investing. For example, you may be able to deduct depreciation on rental properties, and you may be able to defer capital gains taxes on properties that you sell. It is important to do your research before investing in real estate. This includes understanding the local market, the different types of real estate investments available, and the risks involved. 6. Store money in retirement accounts. Retirement accounts such as 401k and IRA are investment accounts that allow your savings to grow exponentially by investing them in the market. Sean Gould, a wealth strategist, recommends that you prioritize contributing to your 401k up to the match that your employer offers. This is because your employer will match your contributions dollar for dollar, which is essentially free money. After you have maximized your 401k contributions, you can then start contributing to an IRA or a Roth IRA. Another good tool people don't think about are HSAs, he says, referring to the savings accounts for which people with high deductible health insurance coverage are eligible. If you sock money away in an HSA, you don't lose it, and whenever you have healthcare costs, you can pull the money out and not pay taxes on it. When you turn 65, it turns into an IRA and you don't get penalized for using it for other costs. You can pay Medicare costs and long-term care premiums. 7. Earn a professional degree or certification. Another way to make your money work for you is to increase your worth on the job market. Investing in your education. If you have the time and money to invest in furthering your education, you can make yourself more marketable to employers and earn a higher salary. This doesn't necessarily mean going back to school for a graduate degree. There are many other ways to improve your skills and knowledge, such as attending workshops, taking online courses, or even reading books and articles. Upskilling. Even if you don't have the money to invest in formal education, you can still increase your worth on the job market by upskilling. This means learning new skills that are relevant to your field or industry. There are many free and low-cost resources available online, such as Coursera, Udemy, and Khan Academy. Building your network. Your network is one of your most valuable assets in the job market. By building relationships with people in your field, you can learn about new opportunities, get referrals, and even find mentors. There are many ways to build your network, such as attending industry events, joining online forums, and connecting with people on LinkedIn. By taking steps to increase your worth on the job market, you can set yourself up for success in your career. I hope this video helps you in being one step closer to your financial goals. Please remember to click on like and subscribe. After you have subscribed, please leave a comment in the comments section below and I will try to reply to your comments. I'd see you in the next video. Bye.